guys. You can see time is around 10:36. What you can see here is that the market here is forming a chalk over here. If you consider the common point between this, the common point here, guys, the market here reached all the way to this optimum trade entry zone here. So what we are seeing is that in case if the market closes above this level, guys, there is a high chance the market might go bullish. But in case if the market rejects price from here, you can take short position here, keeping your stop loss just below that candle itself. Below this candle, guys, just one candle of stop loss. Not even a candle, guys. A half candle of stop loss is what I'm expecting. So I'll be explaining to you why I had traded this. But what I need to see here is that you can see rejection of price from 9 as well as 21 moving average here. You can see this kind of rejection of price, guys, clearly indicating some sort of bullishness. That's why I'm a little bit confused here. You can see this rejection of price rejection over here. So in case if the price closes below this level, guys, is where we can, the horizontal line which I mentioned here. In case if the market aggressively breaks this level, then we have a better confirmation that the market might continue bearish. But I have taken my short position here itself, guys, keeping my stop loss above that candle. So what's the trade analysis for me to take short position is that you can see the market aggressively sold towards the upside. And of yesterday's swing, guys, the market rejected from 0.38 level or the pivot levels. And if you consider yesterday's swing momentum, this is the 50 of yesterday's level. And this is the 0.38 level of yesterday's. And this is the pivot levels. You can see exactly the market came all the way to this pivot levels, rejected price from these levels, and clearly formed a chalk over here. And you can see clearly market broke this level as well. There is a wick formation over here, guys, but definitely that wick is not what we had thought. So you can see this is the last up candle which broke structure towards the upside, and you can see this kind of momentum towards the upside. It is not as bullish compared to this aggressive selling towards the downside. And this is where we have taken short position. I have exactly told you at this candle, it's around 9:37. Is where we're going to take long position, short position, keeping my stop loss just above that candle itself. You can see the aggressive momentum towards the downside. And if you consider this swing momentum towards the upside, the common point between this to the common point between this. So let's try to mark this level over here. Once if this candle is being broken, we have another better confirmation that the market might go bearish, guys. So, and for target levels, what we can target is that the common point between this to the common point between this to the common point between this. This is one target where you could have targeted it all the way to 1.68 level over here, the 2.6 level, or let's target it all the way to this 4.26 level over here. This is one target. And if you consider this swing momentum over here, guys, the order block levels over here that I would be mentioning to you later, guys, because the price action here is not as clear as what it is. So let's look into premium charts and see. So if you consider the Fib extinction levels of this momentum, you can see they have this candle to the low of this candle to the, let's consider the common point between this, because the common point between this to the common point between this. So we can target it all the way to 54,951, guys. So let's mark this level 54,921. 54, 54,921. So it's the market level is here, guys. So let's see, guys. Our stop loss has been fixed. You can see this candle breaking. So what you can consider is the market aggressively selling towards the downside, and you can expect some kind of good momentum. So what we need to see is this spike over here. So you can see the market is almost here, guys. Is a demand zone over here. Entry over here, guys, is what I am expecting. Keeping my stop loss just above that candle and targeting it all the way towards the upside. So you can expect the market to come all the way from 30, guys. I'm explaining you. The premium is around 30. You can target it to 3 to 4x, guys, the capital. So from 30 to 90, I guess. So it's been 3x, I guess. So let's see in case if you can see this aggressive selling, guys. I have told you at exact moment where the market here was rejecting, where price was rejecting from optimum trade entry zone over here. So let's take this everything out and just focus on the trade only, guys. And even this order block levels also will take it out because it has already showed some sort of confluence here. And you can see the market almost trying to break this level as well. So even let's consider not take this one, guys. So I've already entered my position here, but this was another entry which I previously failed to record. And this is the recorded video. So I'm posting you And this was the aggressive entry, guys. This is with confirmation entry. So our stop loss was just not even a candle of stop loss, but just half candle of stop loss, guys. That's what I usually recommend you to trade. So let's see in case if our target levels has been hit. So let's try to plot the fib extinction levels over here. The common point between this to the common point between this to the common point between this. So the target levels where we are looking for here is that the market might come and break this swing low as well. So let's look into this 4.26 level only, guys. So I'll be holding it all the way to 4.26 level. You can see there is no support over here, but definitely there is some support over here. Is the 3.6 level demand over here, the 5-minute zone. There is some sort of support over here. So you can expect price coming all the way to this level. So just try to hold on, guys. I'm not sure of how aggressive the price might come, but definitely the price would come. And our stop loss is almost, we can break even the stop loss, guys. So in case if the market aggressively sells towards the upside as well, show some buying pressure, we can like exit our position with a minor stop loss. So let's trial our stop loss to this candle over here. So this is our trial as well. So in case if the market aggressively shows some kind of momentum towards the upside, we would exit our trade, guys. So let's wait and watch and see how the market behaves, guys. See guys here, the market came all the way to this optimum trade entry zone over here and price rejecting from these levels and continuing further selling towards the downside. So that's why uh, levels are very important, guys. Even though I tried my stop loss still level, you can see the market rejecting from these levels and continuing further bearish momentum. So it's always to maintain a strict stop loss less. In case if the market would have broken above these levels, I would have exited my position. But you can see the market failed to break above below this VWAP level and again showed some kind of bullish momentum. But here the market failed to break this optimum trade entry zone where you have taken short position and market continuing further towards the downside. In case if the market tries to take support over here and breaks this level, we'll exit our position. But as long as that happens, we will be still holding on to our trade, guys. You can see, guys, what happened here. What happened here is that the market, we have entered our position at around 1036, guys. You can see it's around 1036, and this is the zone where we have entered, and the market showed some kind of momentum towards the upside. Towards the upside. But what we need to keep in mind here, guys, you can see this is the zone where we have entered, expecting the market to further go towards the upside. But you can see this kind of consolidation where the premium has been decayed here, guys. You can see this kind of momentum. Again, the market came again to our optimum trade entry and rejected price from these levels. And if you see here, the rejection of price, this candle, guys, over here, so it's around 1136. And 1136 is this candle over here. If you see, this is around 1116, guys. So let's mark the 1116 candle. You can see this candle over here. This is the 1116 candle, which showed some kind of bearish momentum towards the downside. So after this candle is where you could have taken stop loss, keeping your stop loss just above that candle, and you can see how the momentum here behave. So short position here, guys, keeping your stop loss just below that candle itself. And you can see from 80, the market went all the way to 50, guys. You can see the market reached all the way to 50 levels, and you could have clearly tripled your premium here, doubled at least, I mean, more than double, guys. So this momentum is where you could have captured. But this premium decay, guys, you can see this premium decay where the market showed a huge momentum towards the downside. This decay over here, this decay and this decay, this is what not expected, guys. So that's why option trading is very risky. And you can see this one momentum where the market headed higher, rejected price from these levels and continuing further bearish. So I don't think the market will, in even the spot chart, the market might continue towards downside, guys, but the premiums would definitely not increase. So I would just recommend you to exit, guys, your position. So I hope you're understanding, guys, like this momentum towards the upside where we captured it of this candle over here. Even though the market showed some kind of decay in price over here, with this candle is where we expected the market to go bearish, and you can see this momentum where we capture a very good momentum towards the, even though the market might head down from here on, but I'm not sure about this premium moment. You can see the market rejecting and continuing. So, so that's it, guys.